In the world of finance, knowing what an IPO is a must know. And the equivalent in crypto, the ICO. So let's go. Hi and welcome. Let's start off with the IPO, which stands for Initial Public Offering, and refers to the process of offering shares to the public in a private company in a new stock issuance for the first time. An IPO allows a company to raise capital from public investors in conjunction with going public, getting listed on an exchange. In the transition from a private company to becoming a public company, it's often the first time that the early investors and the founders have the possibility to realize some of the profits by selling their stocks. For a company to be able to get listed and do an IPO, they must meet the requirements of local authorities. In the US, it's the Securities and Exchange Commission, the SEC. After the company is in compliant with the law, it needs to be in compliant with the rules of engagement for the stock exchange.
Stop acting like you know the way ahead, like you know the rules. There are no rules, man. We're lost.
No.
Before the listing, there's an investment bank hired to plan the marketing of the IPO, set the price of the stock, and execute the whole operation. And now to the ICO, Initial Coin Offering, which is the crypto industry's equivalent of an IPO. A company seeking to raise money for an coin or an app or a service can launch an ICO as a way of raising funds.
Give me money, money me, money now. Me a money needing a lot now.
That was Charlie's line. Yeah.
Investors can buy into the ICO and receive the new cryptocurrency. This token or coin may have some utility related to the product or service that the company is offering. It could and also represent a stake in the company or the project. ICOs are not regulated in the same way that IPOs are. So here it's more important to do thorough research and be cautious. There is a lot of scams out there among the ICOs, and there are just getting more of them.
It's over. We are screwed.
During the ICO campaign, they often release the white paper. And if you want to know more about what a white paper is, you can check the description for a link. One important aspect to look at on an ICO is the structure of the supply. And there are three kinds of structures: static supply and static price. The company can set a specific funding goal or limit, which means that each token sold in the ICO has a preset price, and the supply of tokens is fixed. The next one is static supply and dynamic price. An ICO can have a static supply of tokens and a dynamic funding goal. This means that the amount of funds received in the ICO determines the price of the token, and that the token supply is fixed. And the last one, dynamic supply and static price, meaning that the amount of fund received in the ICO determines the supply, while the price of the token is fixed. I know ICOs can be very exciting, but be careful out there. That's it. If you enjoyed today's episode, don't forget to like and subscribe to favor us in the algorithm. And if there's something you want to know more about, you can comment that down below, where you will also find our Twitter/X accounts, Instagram, to find out what we are doing between the episodes and stay updated on current news and events. Thank you.